What's up, traders? You got to mute myself here 1 second. There we go. You guys hear me? Give it a second for some people to jump on. Hey, what's up, Ryan? Happy Friday, man. Where's everybody joining us from? Usually got a global crew. It's kind of late there for the London European individuals. Probably what? 3? 3 or 4. What's up, Dims, Micah? Is that Rio? Is that my FX Rio? My FX team? Southern France? Nice. That sounds nice. It's probably 70 here in South Florida. You guys are probably a similar temperature, right? Southern France? Maybe a little bit cooler. Houston. All right. Gotta love Texas. Jorge's Miami. Love it. Are you getting a lot of that coverage on the bridge that collapsed down there? 12 Celsius. All right. So, guys, we just did a what's up, Gio, Santiago, Felix? We just did a podcast. It was real brief, and I guess I was just talking about today was the Bear Stearns anniversary of when they were acquired in 2009. I think they had a mistake. They said it was 2008. It was 2009. And it was March. March was the low in the market. That was the low of the move. So I didn't get to talk about it on the podcast, but that's how markets work. The newer amateur novice traders, they see those headlines and they say, "Oh my gosh, Bears, they had to be bailed out. That's terrible news. I want to short." And that was the low. That news, it pretty much put the low in the market. So the market trades down from the rumor, and then you want to cover into the news. But that was a crazy time to trade. I remember they had they were replaying some CNBC highlights of the CEO at the time of Bear, and he was on, I think, several months before, talking about how they didn't have any counterparty risk and how, oh yeah, no, I'm not aware of anybody that doesn't want to trade with us. And I remember we wouldn't touch anything we wouldn't touch a single bond that Bear was trading. Kidding me? Last thing you'd want to do is, sell the Bear, and then they turn around and they didn't have the cash to settle, and then you think you're out of your position and you're still long, and the market's just points lower. So that happened when Jeffries, I think, it had a big debacle. It's not too many years back on the mortgage side of things. And it's the same thing there. Once the street loses confidence, it's always about confidence. It doesn't, at the end of the day, trading and investing is really about confidence. And so, especially on the trading side, it doesn't take much for the market to get spooked, but it's just a snowball, because what happens is, like on Bloomberg, I used to have, they called it FIT, which was FIT. It's fixed income trading. And you can plug in to the dealers, the dealing desk right in there on Bloomberg. So I could trade right through Bloomberg software, but I had to onboard all the different dealers. So you got to send them our firm's paperwork. There's a whole checkout process. There's a whole compliance process that you have to go through to get what they call get open with these different firms. So if I wanted to trade at RBC, Deutsche, Credit Suisse, I would just make sure I was open with all these firms and in good standing, because if I ever needed liquidity or I wanted to buy or sell with them, you got to have an account there with them, basically. And then you're trading directly with that firm. Well, what happens is when you get into some sort of event like that, and there's something happens with a bank or any type of institution there, that your compliance group will just say, hey, we're not trading with that particular firm anymore. There's way too much risk that they can't clear their trades and settle. So they're showing an old interview, and he was basically just lying through his teeth, saying that they weren't aware. Meanwhile, Goldman was telling the reporter that, the hedge funds were long these different credit swaps, and they wanted to hit a Bear Stearns bid, and Goldman was like, no, we're not going to accept that. Can't trade with them. And that's what happens. It was the same way with us. We wouldn't trade with WAMU. We wouldn't trade with Bear, Lehman. And we covered those guys, a lot of those traders on those desks. But anyway, what else do you guys got going on? Yeah, it was. Yeah, 2008 was nuts. Yep. So you guys want to talk Bitcoin? I just had the S&Ps up because here's March. Hold on, let me get my annotation tool. You guys see that? That was the low right there, March 2009. The big picture in markets, I don't think S&Ps are really anywhere special. They failed at the top of the range. They're kind of just hanging out here. There's not really much to do. I'm a little bit long the VIX. I probably will cover if we can get S&Ps to 2,700. But so far, we're just kind of catching the 8. We might take another leg up. Still long some individual stocks. Sold some calls on Apple that we covered earlier in the week. I'm just kind of waiting. The same thing. If the market bounces, then I'm going to resell those calls. If Apple and the rest of the market rolls over, then hopefully I'll make some money on my VIX calls, and then I'll look to actually buy some stock back towards the bottom of the range, maybe sell some puts. We talked about having, you want to set yourself up so you have optionality. So if the market goes up, you know how you can take advantage of it. If it goes down, you've got different things that you can book and take advantage of. Treasuries are back off today after a little bit of a rally yesterday. Gold was pretty cheap last night. I bought a little bit. It popped, took some off, and now you're back at this. I like this 1300, 1310 zone. I've been pretty bullish on the dollar. So this is a hedge to be a little bit long gold. This is kind of an inverse head and shoulders here. So this is a big area right here. There's a lot of support. So if I'm long dollars and I'm long gold, there's not that many scenarios where the dollar is really going to get crushed. So I'd lose money on my FX trade without gold really rallying. So if the dollar were for some reason really sell off, gold it usually has an inverse relationship to the dollar. So they call that a pairs trade. That's a good way to play. If you like the dollar, when you get these dips in gold, it makes sense to add a little bit back. You like that short, Ivo? Oh, that was Dims. Yeah, thanks. I just did a Medium post on. I tried to get it out Wednesday when it was actually Pi Day, and I was way too busy. But that was another great example of our Pi line, just simple signal, time that up with the cycle. But yeah, it was a good call. And then 75.60, the reason why that's support, that was the daily low close down here. You guys see that? So the 6th, we closed at 70. I thought it was 75.60. It says 7,600. Maybe I got that wrong. It was 7,600. Anyway, the market held right in front of that area yesterday. So you got BTC trapped between. I should change that. That was kind of sloppy on my end. 7,600. Wrong everything. When we were trading on the desk and we were making markets, and you got to be really specific on your levels. Like when I trained junior traders, and they would, I ask them for a bid, and then they give me the offer side. Like that's a big problem on the desk. Like you can't make mistakes like that. If I say, offer me 10 million tens, what's your best offer? And if the market's like, let's say in treasury market, the cash market's par 14 plus is the bid side. And then the offer side is par 15. Well, if I go to somebody, like, see if you guys know, if I ask you for an offer, what do I want to do? And this is the ask side. So if I say, hey, give me an offer on 10 million tens, do I want to buy or do I want to sell? So I'm asking for the offer side for a price, but I want to buy, which gets confusing, right? Because exactly, right, Checkswick. So, hey, I need an offer, and so the new trader's like, oh, you need an offer. Oh, so we want to sell. Like, no, I'm a buyer. I need an offer. What's your offer? Oh, I'm a par 15 offer for 10 million tens. Okay, you're done. And then you hang the phone up, and then the new trader's like, did I just buy or did I just sell? So the reason I bring that up is because if you get these little levels wrong, they actually really do matter. Like we used to, it would be pretty tough on the trader if they keep going the wrong way like that, because you'll lose money. You end up selling instead of buying is a big problem. And it's so fast that you just have to get used to when you're doing it auditory like that. It's different than just how we trade on the screens. And so when we get something wrong, we'd always be like, wrong everything, just stop. Like the junior guys, like, just stop. You're wrong everything. So that was me wrong everything with this level down here. This is actually 7,600. Yeah. If yeah, give me an offer. Okay, I'm a par 15 offer. Okay, you're done. That means I bought 10 million tens at par 15. I need a bid on 30 million off the runs, Novi 16, 4 1/4. What's your best bid? I'm a par 14 plus bid. Okay, you're done. You got to know that, okay, I just gave the guy the bid side. So he's sold to me and he hit my bid. So now I'm actually long tens at 14 plus. Whereas it's easy to go the wrong way where it's like, oh, well, I gave him a bid. So does that mean that I sold there? It's like, no, he needed a bid because he wants to sell. What's even trickier too is that when you want to get out of the trade, so if I have somebody that comes to me and a customer's like, hey, I need to buy tens. Well, I can't if he says I need to buy tens and the market's par 14 plus, if I tell him that I'm a 14 plus bid and he wants to sell and he says, okay, well, guess what? Now he just sold tens to me at 14 plus and I'm long 10 million tens, but I can't get out of the market right now at that level. I mean, I could if I have on the screens a 14 plus bid, I can sell and hit the screens down, but I wouldn't make any money. The only way I would make money is if I bought tens from him over the phone at 14 plus, I'd have to go over here to the offer and put 10 million tens on the screen on the offer side. Well, I might not get lifted there, meaning somebody might not buy my tens from me at 15. Like if the market moves down, I might be the offer side, but somebody has to come actually lift me for me to get out of those tens. So if I buy at 14 plus, it's kind of risky that I might not sell at 15. If I can sell them at 15, just so you guys know, a plus is $312.50 per 1 million. So you'd make you'd make $3,000 on 10 million tens if you can make a plus there. Or the plus is actually a half of that. A full tick's 312. It's 156. So you'd make $1,500. But the point is that if somebody comes in and they wanted a bid, I actually have to bid back behind this level. So I'd always teach my junior guys, I was like, just visually think that when somebody asks you for a bid, you need to go lower to the left, and you need to quote them a price that's below where the screen price is, because if you want to get out, bang, bang, so you're not holding the 10 million, I got to tell him 14 is my bid, buy him from him at 14, and then I can sell and hit the screens. I can hit the bid on the screens at 14 plus. That's the safest way to make money. I don't know. That's just some trading talk. I don't know if any of that makes sense to you guys. That's the difference when you're making markets and you're trading between different market participants, and you're not just bidding and offering on the screens. That's kind of, how you make markets, or how you fill your customers. So the language becomes very important when you're on a trading desk. Like even simple things like saying the word at. Like at, if you say where's the price at, that assumes that you're talking about the offer side. So, people would get pissed if you quoted them the bid side when they wanted the offer side. So let's see what else here, guys. So what are you guys doing with BTC in here? I think I got to log back in actually. Yeah, so the offer side is the asking price. So if someone says, "Hey, where's the price? Where's the price at in tens?" You gotta quote them the offer side. You guys are just trying to short it. Hold on. No, what's this never happens to me. I gotta log back in. Yeah, I tried to communicate that a little earlier that it's not a bad place to be day trade short. Not a bad place. I think some of you guys stayed short yesterday around 8,300 and you got a nice drop. I think I think some of you guys were short there. I think on BTC, you're a little bit in no man's land here just because either you got to fail at pi to roll over the rest of the day, or I think there's a chance that we're going to maybe cycle back a little higher. And so, in our model, if you get above the bands, you tend to go back to the 200. So we're kind of right at that do or die spot. Either fail and we continue this hourly downtrend, or if we pop above it here, then I'm kind of looking for a move back in this area, this whole area. And then I'd be a seller again from a hedging perspective. Or if there's stuff we bought well yesterday, like Cardano, we bought down here, bought some salt this morning. If the market rallies, then I'll probably be coming out of those. If and when the market gets back to these levels, I'll probably take some of that stuff off we bought well. Some of the Ethereum we nibbled on this morning. Go to the other charts here too. I still like Neo down here. I like Dash down here. I like Ethereum Classic, and I think even Lisk kind of looks attractive. Maybe EOS. If you guys like EOS, probably worth a nibble. We can kind of run through the majors though. I didn't look at the relative value basis today. So Ethereum's that's a bad print. You buying EOS, Santiago? All right. Mike has been short. So I've been saying that I thought Ethereum looked kind of cheap on a relative value basis. Really had Litecoin and Bitcoin Cash move up. All right, so that's on the daily chart. That seems really wide. Ethereum versus Bitcoin Cash. Did Bitcoin Cash rally pretty hard this morning? Yeah, Dims. I like Cardano. I like Cardano down here. Yeah. Bcash is having a pretty good move here. Probably want to take some profits if you're long, or not even if you're out of the money, not take profits, but I'd probably be a seller here at the 200 and back at Pi. Sell Bcash, buy Ethereum. That was a pretty good spread widening out. Litecoin's trading better this morning also. I like that you're getting above the highs here. Maybe we're due for a move back to 180. Just saw that headline for Lisk. Headline for Lisk came across. Yeah. That was standing out to me the other day. Yeah, this is pretty good here, guys, on Lisk. I like the fact that you just had this kind of one-way long ass swing line, and then we got to Pi, basically held it, did a bullish engulfing reversal. You took out that swing line. I like Lisk here. This looks pretty good. You know, it could easily go back to halfway. I like that. I like that Neo is back here. Right here at the 200, right into that low support. I'm going to add again this morning once we get off here. And then I like Dash back here too. So it's the same chart. You're below the 200, but you're back at that support area. I don't know what the weekly looks like. All right, Dennis. That's the symbol, man. MAN. And then Lisk or Ethereum Classic and Dash kind of look similar. They're back on that low support. Pretty sure Ethereum Classic's below the 200 day. Yeah. But I think you got a good risk reward here. The cycles are low. You're really oversold. we'd had the last two moves we made were coming out of long. So now you want to put that back on. You could easily go back to 28. Once you get above the 8. Some good opportunities down here. Yeah, I mean, that's definitely still possible. To, I'm not saying that BTC is out of the woods by any means. I think some of these others look better. All right, I don't think I got it on the chart. The MAN. Envion. You guys familiar with Envion, the mining, like mobile mining company? Did a massive ICO, 65 million or something. That coin's trading now. Anyway, that's kind of one I want to keep an eye on. What other tokens you guys looking at? The Binance coin had that big day when it was in the news. We didn't get any follow through, but we did hold about halfway of that candle, and now it's catching the 8. So I still think it's got a shot at making another higher high. It's just waiting on the market to pick up. Here's your bullish wall. You never took out the lows of that candle, so it's still trying to do better. There's your swing line setup. Boom. Long, stop below the low. See if we can get to new highs. I did add to BNB somewhere on this day. Looks like it wants to go. Encash. I haven't heard of this one. We only have it versus like BTC or Ether. It's holding up pretty well. Even versus Bitcoin, it's holding up really well. I mean, that's in a bullish uptrend. What else? CTR. Dodd-Frank. couldn't have put a worse guy in charge of market decisions, market laws. This one's pretty beat up, you know. It's done a pretty much 100% retrace from when it broke out. So it's probably time for a cycle back the other way. And it broke out right here. Back to those levels. You're still making lower highs though. But that's probably close to turning back up. What you can do is just wait for some higher highs on like the hourly. You can wait for this one to get back above pi, get in the northern hemisphere, and then you're probably better off being aggressive on pullbacks. It's like 55 cents. Um, you mean that they take a hit from Facebook? So some company out of Miami has a debit card for crypto. That's cool. Cardano. Gas has been pretty beat up. EOS, still think that's going to probably go the other way pretty soon here. Same thing with gas. Centratech, okay. What do you guys, any new masternodes masternodes at particular coins you guys like? Walton coin's almost back to the 200 versus BTC. Zero X getting pretty low. Yeah, let's look at this versus the dollar. Ooh, you broke to the 200? I guess maybe Zero X go all the way back to 20, 25 cents where it took off from. That would seem pretty cheap. That's interesting here, though. You guys see how it kind of did where Neo's at? Got to the February lows, was right on the 200, couldn't hold it. Maybe there's more to go, more to fall there. You got to get back above the 200 for me to get my attention. Smart still. What's that one doing? Let's see. getting back to this pretty major old support, you know. You obviously had a lot of interest when price was moving up strong here. This will probably cycle back the other way. You know, you only have 18 cents of risk, so I'd be a better buyer there. Just continues to make lower highs. Do you guys get out on these spikes? Are you able to trade these spikes, or is everybody just like, this was a crazy move? 38 cents all the way up to 50 cents, and then right back down. That's probably easier to trade than something like BTCZ over on that crappy stock exchange. I can't get out of anything over there. Zero liquidity. The liquidity is low. Yeah, I kind of figured. Oil was at 62? Really? Yeah. Oh. The dollar's moving. The euro is getting whacked pretty good. I mean, overall today, it just kind of came up a little bit here off these lows. I'm going to be a seller on the euro this afternoon if we can get back up at these levels, back towards 123. I was short this morning, covered, and then you just wait. You just wait for the 15-minute cycle to come back up. You could probably sell a little bit here in case we just collapse back down, but I'm really kind of waiting on the 15 cycle to sell something up in this range on any kind of size. I'd be a seller of oil if we can get back towards 64. Euro versus the pound is getting pretty oversold. I'm still a little bit core short there, but I've covered a lot. We were shorting up here above it, up the top of my range up here. This is just another easy, good call. It's been a great range all year. Couple years. Yeah, Dragon. Been trading Dragon a little bit more. Dragon is pound versus the yen. If you guys aren't familiar. I was short cable this morning. Same thing as the euro. As you come back up here on cable, maybe be a seller. I don't like to trade too much late on a Friday. Yeah, but the yen's been pretty strong lately. show you guys something real quick. You guys go to Awanda's site, which is one of the big FX firms we use. They have this heat map that shows the currency strength. So what's in red has been hot, meaning it's been going up a lot. So the dollar was down at like number 4. This is, and you can change it from, this is just out a month since February. But you can see that the yen has been the strongest. CAD's been really weak. So it's just a good visual. The dollar's been strong. Yen, the pound. And then you see CAD's at the bottom of the stack. And so you see CAD's here. CAD, CAD, CAD. The blue is stuff that's been really cold or down a lot. Gold's actually been pretty weak. That's showing up today. But yeah, I mean, the yen's been really strong, which is, you know, it's reflected in, you know, this move, sell the pound, buy the yen. You know, sell dollars and buy the yen. That's pretty the last month or so down here. CAD versus the yen's probably gotten crushed. Yeah. So it's just straight down. CAD's showing up weak, guys, it's going to have a lot to do with capital flows. So they've put some I mean, there's been some laws coming out on the real estate side. They're trying to that whole real estate market's been so hot for so long, but it seems like there's a decent amount of capital that's trying to come out of maybe the country now. So I think you're going to see dollar CAD go back to like 136. Yep. Santiago. Yeah, I use the same, man. Same stuff for everything. Scott, you were able to get lifted on some of your smart. You've been trading it around. That's nice. I think dollar CAD's gonna. I mean, I wouldn't be adding up here, but I think you're gonna go back to 136, maybe even higher. Held the bands down here. I think you're maybe see 140 even. So you Canadians, currency might be getting weaker, my friends. Pretty strong move this year. On the Apple you did, Santiago? You guys want me to go through this? So I tried to give a visual. So I like trading around the core position. So I've been long Apple for a while. And when it gets overbought or the market gets to the top end of its range, I like to sell calls, sell at the money, maybe just slightly out of the money. And I always sell my calls out basically 1 week because I want to sell time, because that time decay is, just think of it like an ice cube in your hand, right? The shorter you get to expiration, the quicker, when you get inside 2 weeks with an expiration, the time value looks like this, and then it just falls off the cliff. When you get inside of 2 weeks, the time value really collapses towards expiration. So I like to compound my money faster, and then I want to take advantage of the most rapidly decaying options if I'm going to be short them. So I like to sell out a week, and then if I'm going to go long calls or puts, I never do it inside of 2 weeks. I always go out. Usually I go out 60 days or 90 days. So what I was doing over here, selling calls up here, the 182.5s. And then as the market pulled back, because S&Ps were at the top of the range too, or if you're looking at the NASDAQ, NASDAQ's a lot stronger. I mean, NASDAQ's made up mostly of Apple, but when you get to the top of the range, you want to be a seller, sell calls against the stuff you own. Then you get a pullback, made like 77% on those calls in 3 days. And then I close them out. If the market were to rally back up, I just resell the same calls, probably out next week. And then I bought puts. I've owned some puts out into, I think, May at 175 strike. So that's a little bit of a hedge, obviously, a protective put against my longs. But if the market, if the VIX, if the volatility picks back up, which it really could, I mean, it's had a big move. Anytime you get a big move like this, guys, and then you come back, you'll notice how the VIX got in above the northern hemisphere here, above the pie line. It was different here. You rally, you'd come back off. You'd rally, you come back off. Well, when you do this, that changes everything. So you should expect when you get a big pullback, you're going to get some more volatility. So that's very likely. So if that happens, and like S&P's kind of being high within the range up here, this is low within the range, that if the market were to roll over these 175 puts, like I would be taking profit on those if we were to drop back to say like the pie here. And then I'm using that profit on the puts, and then I go buy more stock here at pie and then increase my long. Or or if price dropped here back to 160, I'd be selling puts again. I sold 150 puts here. I'd be doing the same thing. So just like we want to be selling calls when you're rallying, when you have strength, you want to sell calls. If, as one of your strategies. And then the downside, you want to be selling the puts at higher lows when you want to get bullish, because that's a bullish strategy. So at the top of the range, I'm selling calls and maybe buying puts. At the bottom of the range, I'm selling out of the puts I was long, selling out of the money puts. And then as the market rallies, those short puts gain in value, just like the short calls gain in value and the market drops. Well, anyway, guys, pretty good trading week. Pretty good trading week. Santiago, what do you mean, buddy? On the call side, buy call options? The nice thing about selling puts is if you have the cash that you want to buy the stock anyway, like if you were to sell 160 strike puts, say the market drops to here, and then I say, well, I'd really like to buy Apple at 160. So maybe I can sell the 160 strike puts for like $2 or something. And then if the market collapses to my strike, and the person that I sold the puts to, if they say, hey, I want to sell, I want to take advantage of selling my stock at 160, it's like, okay, fine. I keep the $2 and then I get to buy the stock at 160 anyway. That's called a cash secured put. You're selling basically puts where you'd want to buy the market anyway. And I keep the premium and then I buy the stock at 160. That's just, but then if the market rallies, I still make money on the $2, but I don't have to tie up my capital. It's different, just different ways to play it. But I think it's just more of the same for me going into next week. We're still kind of cautious on Bitcoin. We're still making lower highs. So even if we have a pretty good rally over the weekend, I mean, I'm gonna probably reshort a couple lots towards 9,600, and then, which is okay because some of the stuff we bought well yesterday probably is going to be doing better. So Cardano's, bought some salt today, been buying some Ethereum on these lows. So if we rally, I'll come out of that, maybe reshort a little bit of futures as a hedge. And then we still got this February lows is still kind of in the cards potentially. And then I still like being long the dollar. We've had some good calls on the short side of the euro. So I still like the dollar. I was buying more dollar yen last night and this morning. We're still kind of in an intermediate term range there. The big risk to the euro is if you break 121, then I think we're going to go to like 117, at least 118. So that would be a pretty big move up in the dollar. I think stocks are a little bit high within the range, but I'm not bearish the stock market by any means. Growth still accelerating. I'm still bullish. I just think you want to be lightening up here and hedging yourself. That's kind of why we're long the VIX. Dollar yen, I've been buying anything with a 105 handle, just trading it around. Euro versus the pound, kind of back in the middle of its range. Had some good trades there this week. Good week overall. But any of you guys that are new to us, the best way to get involved is just go to Jenkins RM. JenkinsRM.com. You can subscribe to our email list. This is our chat room. It's free to come in there. The cryptocurrency, this is where I have all my training. So our training on the model, you can sign up for our crypto alerts. If you're interested in group coaching, that's there too. So the group coaching, we get together, that's twice a week for 8 weeks. I really train you. We trade together. We get really deep into scaling, just going through the model step by step from analysis to identifying trades, to identifying setups, to working your position with the cycle, the psychology of trading, journaling. I mean, that's high level stuff with the group coaching. And then this is our model. If anybody's interested on, it's 9 hours of basically my 10 years of trading professionally on the institutional side, right? All in, packed in. And then, yeah, guys, follow us on Twitter. Hopefully you're staying with us on the YouTube stuff. Anytime you guys like the videos, I think that helps us obviously with our rankings and stuff like that. And then the Bitcoin podcast. Hopefully you guys are all tuning in to the BPT. Dims, I do have an options training course. I do. I don't have it listed there. I teach on the model and then I go over some option stuff. I talk a lot about the call ratio back spreads, which is one of my favorite strategies. If you message me from our River room inside the chat room, I can work out something with you on that. Or anybody that's interested in the option stuff, it's like $1,500. You get I do talk a lot about the model and then a lot about option. Well, I don't really know why we don't have it listed. Or I guess that's the best way to do it. Are you in our River room, Dims? I think you are. Santiago? All right, awesome, man. I'd love to have you. Got a good team in there. I had a couple new people this week. Couple new people this week. Okay, yeah, just message me in there, Dims, for sure. What else, guys? You guys have any other questions? What are you guys doing this weekend? Trade, eat, barbecue. That sounds good. That sounds good. Oh yeah, I have not had Argentinian barbecue. I bet it's amazing. I've been to Brazil. I like the Brazilian food. I'm gonna try to play some golf. I think this afternoon. It's pretty nice here. But all right, guys. I'll probably talk to some of you in the chat over the weekend. I don't know if this euro is going to come back off. It's probably not going to do much more with it. It's kind of, yeah, I might do the beach. I've been meaning to run the beach a couple times this week. Just haven't made it over there. I was in Salvador, and then I flew over to Manaus in Brazil. I went down the Amazon for like a week. It's crazy. It was fun. Slept on a hammock on a boat. alligator alligator hunting. We were catching with our bare hands. Well, I wasn't. I held some smaller ones. That was a little bit nuts. These crazy like Amazon Indian guys jump in the water. Like, I got to make myself be heavy, and they just jump on the back of the gator. But I really like the food. Yeah. Yeah. That was good. It was a good time. Those ants are wicked. That on the crypto side? Is that on the crypto side, Doug? I think I got to log back in. Got logged out. Now let me check. Q. Oh. Did any of you guys buy salt this morning with me? I think salt's going to rip. Just a matter of time here. I'm having troubles getting a good chart on this one. There we go. It's got a lot of good back and forth. Kind of reminds me of BAT for a while. So the thing on BAT here is not BAT, HMQ. I like this real money candle right here. This is the largest candle in the history of this chart until you got back to these levels here. So as you fall back into the range of that candle, that creates like a buy zone. So you can kind of work along, anticipating another cycle back up. And you're wrong, but the risk is below here. So you can kind of work a position longer term. But I mean, you've traded at a lot of higher levels. So, all of this, there's pretty good reason to think you could revisit that on the next cycle higher. I mean, from an intermediate term perspective, it's a lot of lower highs. but that's what the overall market's been doing anyway. I don't know if I have this one, ARDOR. Santiago is loaded up on salt. Oh, I didn't switch over. Sorry, guys. Sorry. I was logging in. I didn't switch the screen. So on this HMQ, what I was just saying is that this candle here is the largest candle going back to like these candles. This one was pretty big. This one didn't have any follow through, so you made a new low. This candle didn't have follow through right away, but it did follow through with this candle. So that kind of creates a buy zone down here. And then your risk is below this low. And so maybe for the next cycle up, you can retest some of these levels where the market's traded higher. Maybe. And then I was just saying you've been making lower highs like the rest of the market for the intermediate term. You could change that trend, get above here, then maybe you get your pop. The risk is definitely below here though. I couldn't get this other one up, ARDOR. All right, guys, I got another meeting. Thanks for hopping on here. I hope everybody has a good weekend. See what crypto wants to do this weekend. And I look forward to seeing some of you in the chat room. All right, guys, good stuff. Enjoy that barbecue. All right. All right, guys, you're welcome. I'll talk to you later.